Stick till the end of this video if you want to learn a really easy strategy on how to trade the boom and crash markets and get sniper entries like this. Hi everyone, hope you're well. Welcome back to my channel. Alright, so before we jump straight into the market, I just want to show you the strategy that I use. It's one of the strategies that I use. There's some few key moments in the strategy that needs to play out before I even considering a trade. Just bear in mind, this is an example of boom 1000, so we won't be looking for sells, we will only be looking for buys. The first thing that I look at is a liquidity sweep. So if we're in a downtrend and price starts to do this, I wait for a liquidity sweep to take out the stops, because the guys that it's going to trade sell in a boom market, they are going to keep their sells and they are going to get stopped out. That's why I only trade buys on booms and sells on crash. So I wait for the liquidity sweep. Then we need a big impulse move that's going to change the market structure. So we break the high of this leg that took out this low that formed the liquidity sweep. So liquidity sweep happens, market structure shift. Then there's two ways of entering. You can either enter from a fair value gap or you can enter from an order block. Now in what I found that works the best, if there's a fair value gap above an order block at the low as well, that's a really high probability trade. There is a few different ways you can enter as well. Price won't always come back so low, so there is breaker blocks and everything like that, but for this strategy I'm just going to show you how I use a fair value gap and an order block. Alright, so we got the liquidity sweep, we got the market structure shift, big impulse move, enter from a fair value gap or order block, and we target our next level of liquidity. Now next level of liquidity can either be order block that's going to the downside. It can be a fair value gap. If we're in a downtrend, then I won't target the highs, I will target the next point of interest. I will show you in the charts. Alright, let's jump straight into the charts and let's go. Okay, alright, so there's actually two trades I took on this chart. I will put up screenshots to show you guys. There's two trades that I took. One went for the previous high and the other one just went for a point of interest. So before we break it down, let's quickly just have a let's have a look back. Alright, so as we can see, price was starting to get a change of direction here. We created a high, we went low, we created a fair value gap. High was taken out here. We created another fair value gap inside an order block. As you can see, it respected it. So this is where I was looking to enter my trade, right in this area. So as you can see, it came down into our point of interest. Now let's go to the lower time frame. Alright, okay, so this is the 15-minute time frame. The price entered our point of interest on that fair value gap on the 30-minute. Now let's see what happens. What's the reaction we got when price tapped into that fair value gap? It tapped in, went a little bit higher, tapped again, went a little bit higher, swept liquidity there, went up. Alright, so now I knew from this moment on, okay, we have a market structure shift. We had a market structure shift because we had a liquidity sweep here as well, as you can see there. Big impulse move, order block, and a fair value gap. Alright, so this is a good confirmation. So I entered around here, if I'm not mistaken. I've entered around here and my stop loss was just beneath this fair value gap, and I targeted the next high that created this impulse move there. So this was my target. I closed a little bit before the target. I closed around here, but yeah, as you can see, price went straight to the TP. So let's just quickly recap. Fair value gap was created, tapped into the fair value gap, liquidity sweep, market structure shift, enter from an order block, and we target the next level of liquidity. Alright, so this was the first trade that I took. Let's go back to the 30-minute. Right, so that was the first trade I took. The next day, what happened? Alright, so now we can see price went to our target. Now there's the high, didn't take out the high, so I believe price is going to come back lower again. Alright, so now we work in the opposite direction. Okay, so before we do that, let's see what's going on in here. Let me just delete this. So liquidity sweep, market structure shift, tapped in. Now, okay, so this is what I saw. So the first entry was there, but exactly the same happened here. Alright, let's have a look. So we got a liquidity sweep, we got a market structure shift. Now I'm waiting to enter from this order block. Remember, the first trade that I took, I entered here. If you missed this entry, you could have taken this entry that did exactly the same, entered from here, and you could have gotten the same trade that I took here. But I entered earlier. I entered here because of the first move that presented itself. So I didn't enter, let the trade move, and now I'm waiting for the price to come back. Now the price created an order block here. As you can see, it tapped into this order block. Now where I exited the trade was around here on this order block to the downside, because remember, I'm not going to target this high now because the market is showing me didn't break this high, so market is going in a downtrend now. So it's only going to be a short-term trade to enter from here to exit at there. Alright, so let's have a look. Let's go down to the 15-minute. Let's see if we can see something here. Let's go down to the 5-minute. There we go. There we go. Alright. So it entered our order block. Was playing around a little bit. Price created a new low and a big impulse move. Alright, so now I followed literally the same strategy. Liquidity sweep. Market structure shift with a big impulse move. And where's that order block on the higher time frame? There we go. And then I've entered my trade on that order block. Price just below this low, and I targeted the order block there. As you can see, it literally tapped our order block there, and I was out of my trade. Awesome. So this is how I analyze the boom and crash markets, exactly like you will analyze the normal markets. Nothing changes. The only big change that I do is I don't trade crash and then I buy, and I don't trade boom and then I sell. I trade boom and I buy, crash and I sell. Hope this video was helpful. Hope you guys learned something new. If you have any questions, please don't hesitate to leave a comment. Please like and subscribe to my channel. It will help me a lot as well. And yeah, I hope I can share some more strategies with you guys in the future.